Well, hi everyone, and welcome to the Buffett and Beyond Stock Analysis video. And this week we are going into cybersecurity, which everybody needs and every company needs, and that's Palo Alto Networks. And folks, cybersecurity is the name of the game for all companies. Gotta have it. And remember, if you want to live on this beach like Jimmy Buffett and watch this sunrise like Jimmy Buffett is doing right now, okay, he's not doing it right now because I'm recording this in the afternoon, but he sits on this beach and watches the sunrise. If you want to do that, you've got to learn how to invest even better than Warren Buffett. And for those of you who want the stocks in our portfolios and you want to see our other portfolios that we talk about and you want to receive the daily letters for a while, sign up for our 2-week subscription. All we do is need your email. Go to buffettandbeyond.com, folks. There you go. You'll sign up for everything. You'll receive something every day and 3 videos on Saturday. And let's go over Palo Alto, and it offers a next generation network security platform, and we all know that allows customers to secure their networks. And that's what we want, folks. We want those companies to be able to secure their networks and their content visibility and control while safely enabling the increasingly complex and rapidly growing number of applications running on their networks, folks. They're coming out every day. Okay, let's look at the numbers, and this is for 2024. And the reason is because Palo Alto wasn't making any money until this year. It was losing money. So we're going into the 2024 projections, and the green line is, or the green lines, the vertical lines are Palo Alto, and the blue lines are the average stock in our database, which contains about 1,800 stocks. So when we look at the clean surplus return on equity, we can see Palo Alto is twice as good or twice as efficient as the average stock out there. And when it comes to net income is way up there relative to the average stock. But we're going to see why we get these numbers in the next few slides. Revenue, it is almost tripling the revenue of the average stock out there, and their 5-year revenue is way above this 19.2%, just to let you know. So let's see what the numbers look like. And over here, the net income, that's the clean surplus earnings. And you can see this company was losing money all the way up until this year. And we may have surprises coming out because their earnings come out next week. So this is just 1 week away, folks. And you can see the clean surplus return on equity was in the negative all these years until just this year, and all of a sudden it shot up, and next year expected to be 27.7%. Retention rate, how much of the money that the company is making, put it back into itself. Everything it makes is going right back into it. The net income growth, and this is that 50% we saw on the last chart, folks, and you have a 222% here, but that's coming off a negative number. So in other words, we're looking at this, so we don't pay attention to this number too much, but look at that 50% growth for next year over this year, which should be a pretty good year. Revenue growth, yeah, we can see this revenue growth has been constantly over the 20% level, and a 5-year average. And by the way, these numbers are expected to go up, and we'll show you that slide in a second when it comes out with earnings next week. But the 5-year average, 27.6%. That's amazing. What we don't care for this company right now is that it has a little bit too much debt. Now, this is Warren Buffett's rule of thumb, is that if a company takes all the money it's making and uses it to pay off debt, how many years will it take to do that? His rule of thumb is 5 years or less. We like to see less than 5 years. We like to see about 3 years. So this worries us a bit. Now, ahead of its upcoming earnings report, which is next week, Friday, August 18th, the average estimate calls for Palo Networks to report earnings of 54 cents a share, and this is just for the quarter. And that's up 260% year over year. But don't forget, this is coming from that negative number there. So don't get excited about that. Well, you got to be excited. It's making money now. But that 260% is because it's coming from a negative number. But here we go. Year over year with revenue pegged at 119 billion, up 26% year over year. Let's look back. We're looking at this number is going to be raised, which means this number will be raised. So we're looking at next Friday as being very, very important for this stock. And let's see how this company has done over the past 1 year. Now, we have Fortinet in our 30 stock or 30 growth stock portfolio. We have Fortinet, and just last week when Fortinet came out with its earnings, it missed its earnings by, folks, about 3%, and this stock just hit the skids. This is the blue line. So the black line is the S&P 500, blue line is Fortinet, and this yellow mustard colored line is Palo Alto. Now, one thing I want you to notice right here is that Fortinet is the company that was making money all these years, and it got hit hard because they expected the earnings to be better than expected. Even though Fortinet's earnings were up over 20% over last year, it was just not what the market expected. They wanted more. More is good. I agree in most instances, but it really fell, and it's just starting to come back now. But look at Palo Alto. It fell about half as much as Fortinet. And look at Palo Alto, how it held its pace with not only the market in here, but just shooting ahead with the growth in the tech stocks, and it's holding its own, and the market seems to not be punishing Palo as much as it did Fortinet right in here. But of course, we have to see the earnings next week. Now, when we look at 5 years, black line is the S&P 500, you can see Fortinet was way ahead. It went to new highs in here looking at this, and then it really fell drastically, and it's just starting to come back, which you could see on the last slide, but not so much on this slide. And this is Palo down here, and we see Palo dropped about even less than half as much as Fortinet. So, as I said, we have Fortinet in our growth portfolio, and we're looking at Palo. We are really looking close at this stock. If they come out with good earnings next week, we're jumping on this stock. And folks, usually we want to see stocks that are making money 10, 20 years in a row. We don't like getting into a company that has been losing money, and then all of a sudden it is making money, and it is in the right industry, isn't it? Yeah, so folks, we're waiting for next week, and meanwhile, it's the weekend, so get out there, go to the beach, go play golf, sit and watch television, take your mind off the market, because guess what? It'll be here Monday. So remember, if you want to live on this beach like Jimmy Buffett, you've got to learn how to invest even better than Warren Buffett. All right, folks, have a good weekend, have a safe weekend. We'll see you back here right on Monday.